Tej, wouldn't a portfolio in a single sector and only 10 or 12 stocks, wouldn't that be highly volatile?
So whether it be CCP, LCP or KCP, what we have simply focused on is that all companies in our portfolio should be having high quality accounting, high corporate governance. Secondly, they should have demonstrated the ability to generate returns on equity well above cost of equity. And third, high barriers to entry. When we follow this philosophy of focusing on core fundamentals, on focusing on these three things, we believe that whether it's small cap, mid cap, large cap, whether it's financials or non-financials, companies which follow these three tenets can over long periods of time keep on generating 15-20% returns for shareholders, which is what we expect out of the financials fund as well, which is what we expect out of KCB as well. 20% returns over long periods of time, and that is what we've demonstrated with LCP as well. There were questions around, will small caps be more volatile than large caps? How can in a challenging economic downturn small caps perform well? Similarly, what we've seen in Kings of Capital as well is that when we backtested the portfolio over the past 2.5 years, and these 2.5 years have seen almost everything, right? We've seen Yes Bank, DHFL blow up. We've seen the COVID crisis play out. We've seen the ILFS crisis. What we saw was over the past 2.5 years, the Kings of Capital portfolio would have generated a 12% return versus a minus 5% for the Bank Nifty, or plus 2, 3, 4% for the Nifty. And the reason behind this is that the portfolio earnings CAGR over the past 5 years was 19%. So even during a difficult economic environment, especially for the financial sector, we saw that the portfolio level earnings growth was 19%. And therefore, we believe that this portfolio, given it is focused on these three tenets, given that the portfolio level earnings growth is expected to be around the 20% number, and it is a good mix of lending as well as non-lending, we believe that we can keep the volatility a tad lower than the Bank Nifty. Sharp ratios much better than the Nifty and the Bank Nifty, and compounding of the portfolio at around 20%.